What's up YouTube, it's Louis here. I hope you're all well. Today we'll be looking at Quant on the daily time frame on the Quant BTC, BTCUSD, BITTREX chart. If you want to add this, you just go under the video, copy that, start typing on your chart, delete that and press paste. And then it should open and just hit enter and it should open. This chart goes back to 2018. So yeah, it has all the price data all the way back from there. So all the longer term EMAs are correct. It will have more longer term EMAs than the other charts. So what we were saying last week is that we saw the small inverse head and shoulders and we placed the fibs from the top to the bottom of the move because the wicks are signaling the ends of moves, the end of the up and the end of the down as we're coming back up. So last week we were saying that there's a small inverse head and shoulders here. Your neckline is just there. If we see, I was just going to tell you that if we're going to see a daily close above 120 or the 382 at 126, that's when you validate the inverse head and shoulders to 150 to 160. That's your target. But then I've also shown you and made you aware that the golden pocket is key resistance. So even if we do come up to here, you're eventually coming back down. For this to flip bullish, you need to reclaim this old descending triangle neckline at 168, 169, as well as the 786. You need to turn 188 into support, and that's when we're going to head back up to here. This was all over on Twitter, so make sure you're following me on Twitter. I made some posts about it last week. We're almost at, I think, 1.7k followers, so please help me achieve that. There's also a giveaway at the moment for a free course that will teach you from zero knowledge into a self-sufficient trader. I'll be revealing the winner this week, but you just simply subscribe here, follow over here, retweet that post. I've pinned it, so it's the first post once you go onto my Twitter, Louis_crypto. It's also available anyway at 50% off at the moment to help with everyone. But yeah, if you want to message me, head over to my Twitter. So we were talking about the 382 last week. I've spoken in the past how you don't even have to come to this 050 to the 0618. It just is the most retraceable zone. So with the fibs, it's called a Fibonacci retracement tool. So you measure a pump and it signals where is it going to retrace to before continuation. And the golden pocket, or between the 050 and the 0618, is the most retraceable zone. So this is the most likely place it's going to come, but it doesn't have to go there. It could even just stop at the 236. So from here it could just go there and continue, but most of the time it goes all the way up to there, but it can just stop at the 382. We had a bullish pattern over here that had a target all the way up until the golden pocket, but it had not validated itself. I said, let's just simply wait for a close above the 382 at 125, because those were psychological levels. Remember in the video last week, I said each $25 is a psychological level. So if we're seeing, 100 or 125 or 150 or 175 or 200 in certain areas where, if we look to the left, is key. So for example, here we've noticed that 125 was where we found key resistance. If we zoom in, we found some key resistance. We were pumping back above the support. It was being held as support beforehand, but then we used it as resistance eventually. So that's that, and then also it being a psychological level. Okay, that's a point of interest now. So if we're seeing a daily candle close above that, then I definitely know we're going to come to at least 150, the next level. But there were some, you can see the 618 is at 160. So I would have been saying between here, 140 and 160. But 150 would also be a level in between. There's just so many levels you need to reclaim that for this to flip bullish. And remember, at each level you face resistance, so it's not just an easy journey up here. You can see you're already getting rejected. Now you can actually still form this inverse head and shoulders. My apologies, as we've only had this from today. The original inverse head and shoulders was over there. Last week it was over there. So now you could still argue that it could be coming back up because you haven't yet closed below that wick, so you're keeping the potential of an inverse head and shoulders. But again, let's wait for a daily close above 126. Only then are we going up. If you do not see, so are we seeing a close above 126? No, so we should not be expecting that. Only once it's proved to you after midnight, for me GMT, after midnight, if it's above 125, sorry, we're going up. If it's not, then no, we're not going up. So that's why I keep telling you, just expect lower prices unless it's showing you we're actually going up. So for me, we've spotted a potential bullish pattern. So if it were to break up above the 382,125, then I know you're going to come into here, but this is key resistance, so I'd still expect to go lower. But it doesn't have to go up to go lower. It can just go lower. You see how I just drew a line across here, and but if we just ignore that line, we had the inverse head and shoulders neckline here. But with this new line, you can see it looks like a descending triangle. So that's a bearish pattern within itself. So if you just lose the support of the first left shoulder, that's, yeah, signaling is coming back down to fill in this wick. So $87. So yeah, if you are enjoying this video so far, please do like it. Let's smash well over 200 likes on this video. There's more than enough of you watching these videos. So please do subscribe as well. Over half of you aren't subscribed. Leave a comment down below as well. Let's continue with the update. At the moment, I can put some fibs from here to here. You can see that's where we're finding some support at the moment, and that's a golden pocket. So we've measured this move up. So you're retracing into this to continue, right? And that's showing you can actually hold this as support to continue up to here. That would help you. Look, that would be your right shoulder. This would be your left shoulder. This is your head down here. Right, I know it's getting really ugly now, so we'll zoom in. Yeah, you can see. Just like that. And the fibs are telling you, if I just move this from there to there, this is where you're going to find support. I've measured this push up, is telling me I'm going to retrace to continue. So then that's why we're saying let's close above that wick. Where's that wick? 127. So around 125, 127. So if we're seeing daily closes above that specific wick, then yeah, we're going to get that continuation. I can then measure from the top to the bottom. This is our next struggle, but we've just said let's just simply wait for 127. Once we see a daily close, you can see 144. Look, an exact target at 134, which is this exact red line from this key resistance. So that's a target in itself. So it means that once you get there, you're going to get rejected. So you better hope you find support here to go up again. That's for the bullish, but yeah, I just think again, we're just going to run into resistance to continue lower. Even if we do manage to do this move, I still think we continue lower. The only way it flips bullish is a reclaim of this over here, 169, where the capitulation started, that wick, where we validated this M pattern. I told you, thank fuck I said right there, we're coming back to 120. Thank God, because since then, back to 120, 50%. So if you, yeah, and then of course, since 120, we're down another 12%. So from the top down 54%. Let's get rid of this now. So yeah, the only way to flip this bullish for Quant is a massive reclaim of course, the 150 psychological level. This descending triangles neckline I gave you earlier in the month or last month. Turn that into support, and then also take out this high, the 786. Once you've done that, you know you're coming back up to here. So until you're doing those moves, there's no guarantee you come up to here. So you should not be expecting this swift reclaim. You can see if it were to do a move like this, it'd be beautiful. You could say shoulder, head, shoulder. But yeah, that's not the expected move, guys. You've got a lot of resistance ahead. You can see there's just so many lines above us. So again, those are areas which you'll get rejected from. If you believe you're bullish, even if it goes up, you're still going to get rejected at those points. So please understand that. Help me reach 5K as quick as we can, guys, because again, over 50% of you are not subscribed. Share it if you can over on Twitter. Make sure you're following me there. Again, I do have a giveaway at the moment. If you just simply want to buy the course or the mentorship, they are both discounted at the moment. The course is 50% off, down to £150. And yeah, and I'll catch you guys in the next one. That's pretty much it. Thank you.